Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Jordan Roy-Byrne, and he's from the publication The Daily Gold. Thanks for being with us.
Thanks for having me, Scott.
Wanted to get your take on where we've come in the gold market, where we are, and where we're going.
Well, where we've come is basically we were in a bear market, and the bear market ended in December, although a lot of juniors actually bottomed in late June. The rest of the sector bottomed in December. That was the end of a cyclical bear market, and now we're back in a cyclical bull market. And what's interesting is if you look back from the 1960 to 1980 bull market in the gold stocks, they had two severe 60% declines. And so we have now experienced that in this bull market. In the last 60% decline was 75 to 76, which I'm sure you've covered and your guests have covered. And so I think, we have another 4 or 5 years left, and this is going to be probably the final leg up in the secular bull market. So I'm optimistic over the long term and over the near term.
Nice. Do you have any targets? Do you provide that in terms of where you see gold going in the next year or over the rest of this cycle?
I've looked at a lot of historical research, seeing how do these recoveries perform exactly? How much percent do they go up in a year, 6 months? And looking at, I see gold, I don't see it going much higher than 15 to 1500 by the end of the year. I will say, going forward, the key levels are probably 1360 and then in the low 1400s. If we get above 1360, we can kind of see a near or medium term top there in the low 1400s. But if we do get to that point, I think it's reasonable to say we could get to 1,500 by the end of the year. So that's my target for gold.
Nice. And what's your take on gold stocks? Where are you focusing? Are you looking at large caps, juniors, sort of the mid-tier space?
Well, I like to look at mid-tiers and juniors. The large caps historically have a difficult time providing leverage against the metal unless you buy them at the bottom, essentially. And I've done a lot of historical research, and it's interesting because a year after a major bottom, well, let me say this, I've looked at 6 major bottoms going back to 1960, and the biggest correction any of them have had in the first year or two of their recovery is 21%, as I told you earlier. So we're looking now and we're seeing stocks that are already up 50, 100%, 200% in some cases from their lows, and so it's very difficult for people who are on the sidelines to get in. But looking at the sector as a whole, the historical research suggests that you're not going to get a big drawdown, a big correction until a year and a half after the bottom, and that's at a point where the sector as a whole is already up 100% or so. At this point, the sector, I think, is up 30 or 40%, depending on looking at the large caps or the juniors. So I think the outlook over the short term and the near term is very bullish, very positive. I think we're just going to see small setbacks along the way. And you have to buy those, or else you risk missing the bull market.
And can you name a stock or two that you like right now?
Sure. On the producing side, a couple stocks to watch. I would say Silvercrest Mines. I think they're doing really well. And another one you could consider is Klondex Mines.
Okay.
So those are two that I really like. They're producing, they're making money, they have growth ahead.
And do you own both of them?
Yes, I do.
And they're recommended in your publication?
Yes.
Now, I do own Silvercrest. I don't own Klondex. Full disclosure for myself. Thanks very much, Jordan, for being with us. Again, that's Jordan. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.